Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today in this one, we're going to go over the commodity super cycle. We're going to look at a bunch of ratios. We're going to look at some prices of commodities and other things. And we'll take a look to see what's going on and how things are changing against each other. In a commodity bull market, what we want to see is we want to see platinum outperform gold. We want to see silver outperform gold. Eventually, we'll see, I think, a weaker dollar at some point. In the beginning of the last bull market, the dollar strengthened for a portion of the time, and then it rolled over after hitting some resistance. I don't know if that'll happen again, but that's what we're watching. We're just looking to see how these inputs are changing. And then we'll look at a lot of the ratios in this clip. So let's dive in. Let's take a look. I got the dollar behind me right now, the DXY. We have this uptrend line here. We broke that to the downside, signaling a weaker dollar, but then we've strengthened over this past, I don't know, 6, 7, 8 months. Well, it's probably about June 21st, so 8 months, 9 months. We've been strengthening, and we're going to see if we're going to break through this downtrend line. If we break through that, I think the next resistance line is this white one here. And we'll see if we can turn on back down. This one strengthened in the beginning of the last expansionary phase of real estate, and then it hit the white trend line and turned back down into a large bear market in terms of dollars, a weaker dollar. I think that's what's going to happen, but we're still early in this expansionary phase of real estate. So it seems like money likes to rotate, and it rotates through the dollar. That's my kind of reasoning of it. The 10-year yield, this is what prices assets, especially the pricing of stocks and bonds. It has been going up from a big monthly perspective. It's been quite strong. It's broken this long-term downtrend to the upside. I think it will continue higher, and we'll see where this ends up. This does cause a little bit of a headwind into large growth stocks, not large cap, but growth stocks or ones that have a lot of growth, large growth, or dependent on growth. It impacts them the most because all of their earnings are in the future and they get discounted to a higher interest rate. So that's going to be a headwind for those companies with larger amounts of growth. Looking at the Crb Index, just to kind of look at this, and this is stuff that I post on the website that I have. You can see that in the description link, is a large consolidation period with 3 distinct humps. That's pretty normal. We've had a massive breakout to the upside. We got a little wick at the top, getting a little bit of a sell-off. So if I were to dive in here, we'd probably see a little bit of red on the right-hand side. There's your red. And now we're getting a nice, good, solid up day today. Looks like almost like a bullish engulfing, like we might want to try to move our way up a little higher. But overall, guys, the commodity sector has been on fire. I don't know if we're going to continue at this pace or not. We'll find out. But it's been very strong, and it looks quite good. Looking at gold, gold also hitting its head on here, getting a little bit of selling pressure at its all-time high. You can see it come right up and kiss that line. We've pulled back, but we have a bullish hammer here. Usually those are kind of a bottoming pattern where it likes to go higher. But we'll see what next week brings us. So I would say sideways to higher is kind of what I'm looking for. I want to try to attack that all-time high again at 2080-ish, wherever that was, 2080, and see what happens. Now, go into some ratios. We'll dive into the ratios. Actually, crude's the same way. We broke through, and then we're doing a retest when priced in dollars. So that's also doing kind of a little bit of a pullback at the same time gold is. But looking at coming to the ratios, 1 second, guys. Got a lot of stocks in here. Wow. Here's the CRB to S&P 500 ratio. Big picture view. Big long-term downtrend. We've broken that, and we've been rocketing higher. We zoom into it. We've got a consolidation break. This is now in a uptrend line, and you can see this thing just started rocketing higher. It's like levitating off the bottom here. And we got a little bit of selling pressure up here. The ratio did compress back a little bit, or I should say expand back. We'll say expand. And now it looks like we got a bullish engulfing like it wants to go higher again. Similar to this pattern right here. So we get a little bit of a 3-day, I should say a 3-day pullback, move higher, 3-day pullback, move higher. And it's that stair-stepping pattern I'm looking for. And it exhibits it. It still looks good. And we'll see where we go next week. But right now, the CRB index is in an uptrend. It's outperforming the S&P 500. And I suspect that this will continue to move in an uptrend fashion, higher highs, higher lows, upward. Looking at the platinum to gold ratio, we zoom in here. Everything looks good for platinum to outperform gold. We've got larger movements to the upside than the downside pullbacks. So everything's looking all right. Looks like we got a little bit of a resistance line here. And then we've got another kind of resistance line there. It wants to stay in this channel. We'll call it a little bit of a bullish engulfing where this thing could head higher. But everything's intact. We've broken the downtrend line. We're still above that downtrend line. Everything looks good. The platinum to palladium ratio, ever since the war broke out, palladium's been on a tear. So platinum's just been trying to hold its own. I do think that platinum will eventually outperform palladium. Looks like it did that today. That's why it's going on up. With the ratio going up, platinum will outperform palladium. We are at very cheap levels where you can get a lot of platinum for your palladium. So if you're a palladium holder, I mean, it's up to you. I'm not telling you to do anything, but you could swap some palladium for platinum and get a very good deal for it. Looking at the platinum to silver ratio, looks like platinum outperformed silver today. We have this little pullback here kind of at the tip. I still think we're going higher where platinum could outperform silver. I still own gold, silver, and platinum. I was buying platinum more so the past year or two than I was any other metal. I was buying a lot of silver in 2018, 2019. And then 2019, I kind of changed my mind. I was buying a lot more platinum after that because this ratio is so low. I do think there's a possibility that platinum could outperform silver, and we could see a large move in platinum higher. Right now, we're right at that resistance support line. We've kind of fallen back a little bit. I don't think there's much downside on this. That's kind of my guess because we're at pretty low historical ratios over time. And with war and when people get afraid, they run to monetary metals sometimes. Platinum was kind of in the crosshairs of a lot of stuff. Looking at the gold to silver ratio, this ratio I'm expecting to break to the downside eventually. Looks like it's been quite strong the past, 2 weeks or so. That's what these two large up movements and the small down movements are. Looks like there's still some fight for gold. But I do expect that the lows, the highs will start to get lower and lower if they hold. And then we'll break to the downside, signaling that silver is going to outperform gold over this bull market. That's my expectations. Doesn't mean my expectations will necessarily be right. Palladium to silver ratio, when palladium's outperforming, it goes to the upside. I suspect, and this is what I put on the channel, I've used this before, I suspect that silver will outperform palladium in a commodity bull market, especially at the end of the bull market. So I expect that this ratio will compress, meaning that silver will outperform palladium over the bull market. I think it will do something similar to this. It's having a little bit of pause session right now, but I think we'll get somewhere, in this region, somewhere down there. Maybe a below 30-to-1 ratio for sure. So that's kind of what I'm looking for and what I'm waiting for. Looking at the Dow Jones Industrial Average to gold, we're looking on the right-hand side here. We're continuing to contract lower. You can see this ratio, and I've said this over a long time. I started the channel in 2020. So this ratio was going against us. The Dow Jones was still moving on higher, and I said that I was expecting this to come lower at some point. Well, that some point is now. It is heading lower. We did a retest, and now we're beelining it lower, where gold is outperforming the Dow Jones Industrial Average. Could this be a bottom? I don't see a reversal pattern yet. Usually, if it's a reversal pattern, I'd like to see it kind of open down there and then close upward like that. This one, it kind of pre-gapped up. But I think eventually it will be working its way lower. Doesn't mean that I'm saying that the next couple of days or weeks, like it can't come back up like this and then fall lower. I'm just saying it will work its way lower over time, given these market conditions. Gold to oil ratio, we're probably going to see a retest here and then a break lower. We got all the way to about 16 to 1. 1 ounce can buy 16 barrels of oil. 15 is about the average over a long period of time. We could come back up like we did on a return move and kiss it again and then come back down. That is very likely, or is highly likely, to see something like that. And there we are, kind of dipping down right now. It could pop back up for a little bit and do that retest move. That's about all I'm going to say. At the bottom of the 08 market, we got to a 1-to-6 ratio. And this can compress another good amount, about a 3 times compression or so. 6 times 3 is 18. We're about 18 right now. So it's favorable for oil to outperform gold at this time. The copper to gold ratio has just been moving sideways. We're just stuck in this sideways movement. We're at the bottom of the support line for copper. I bet you we might see maybe copper will give a little boost here. If copper were to tank, and let me back out here and look at where copper tanked. Copper was tanking at 06, tanked, pulled up, and then in 08 it really gave away. When this ratio gives way and really tanks down, we need to be looking for it. We need to go back to our housing starts and look at that. This is a precursor to a crash if your copper to gold ratio beelines lower. So that's something we want to look at. At the last 2020 crash, if you look at 2020, the copper to gold ratio was beelining lower, which means people preferred gold over copper, and it was just heading to no man's land. And you could see it, and it actually bottomed in March of 2020. That's when the crash occurred. So it beelined before the crash in stocks. Nice big beeline lower. So that's when you want to run for the hills, is when you get this really low copper to gold ratio. When it starts beelining lower, you got to be a little bit worried. Looking at some of the other sectors, we've got the lumber. Lumber has remained very elevated. It looks like we've got some resistance up in this region here. If we zoom in, you can see kind of it looks like almost like a double top. We might see some relief coming back down, going to more of like a consolidation period before moving higher. We've got nickel. That's pulling on back. You can see the big top. Now, this is something that a top like silver might do, is you get this huge run and then it comes back throughout that day. This is a day. And then you kind of cool off. Will this continue higher? We'll see. We'll see if it does. But that is a short-term topping pattern for sure. Palladium getting hit on the head a little bit. I still think palladium could potentially have some downside. It doesn't do very well in an inflationary cycle. It usually is the one that does well in the off cycle. But there's a deficit in palladium which may prevent it from falling back too much. So the fundamentals support higher prices. We'll see what happens here. I don't want to make too many calls here. Cocoa futures. Cocoa futures are still moving okay sideways. Wheat futures, they've had a massive run and a big wick at the top there. Probably a little bit of a pullback is occurring, but it looks pretty good. Looks like it's trying to find some footing where it's at. Soybeans is just coming up there. It's kind of hanging out. It looks like it wants to run at some point, so it's probably going to do a cheetah rest before moving higher. And then corn is also doing that. It's all the way up there. It's resting at its resistance line, right where it's got a lot of support and resistance. So that's resting there. And then copper priced in dollars has been drifting higher slightly with higher lows and higher highs. Looking at the U.S. Consumer Price Index. Oh, wait, let me go to the PPI. Here's the Producer Price Index. This thing's been rocketing higher, quite strong. These little consolidation periods, all facing an inflationary pressure. The U.S. housing market, we're at 1.638. I've talked about this before. 1.638 million. I think they're probably going to slow down because of supply chain shortages. And that's kind of what I'm seeing. The permits are way up. So permits were like almost 1.9 million. These are slowing down because they can't finish the homes due to supply chain shortages, from what I gather. So we've got that. And then I'm just trying to see if there's anything else I'd like to cover here, guys. The Baltic Dry Index. Let's take a big picture look at that. We've got this long resistance line. It's broken to the upside. It's pulled on back, and looks like this is a retest move where we could potentially move higher here on the right-hand side to move on up. So that looks good for a potential move to the upside as we've broken out, did a retest, and then we'll see where we end up for the Baltic Dry Index. So that's what I've got for today. That's a lot of ratios and analysis that we covered. I still think that we're in this commodity bull market. I think it's going to take a long time to get through it. I'm pretty bullish still. The best things that you guys can do is look for things that are down. Look for things that haven't moved yet, like certain sectors. What are some of those sectors? Like the Baltic Dry Index. Some of these shipping companies are still down. That might be a spot you might want to look at for potential investment. I still like uranium. I still think that's a decent bet. I like oil, natural gas, especially those in America that are exposed to, I think, rising prices, because the world has already gone up massively in their natural gas and coal prices. So I think, like, if you go after those, like anything in the energy sector, I think is going to be a pretty good bet over the next 4, 5, 6 years. And looking at some of the inventories, let me pull up something here real quick. Keep you guys focused on something. This is. I'm going to Twitter. I'm going to go to Eric Natal, or whatever his page is. Eric Natal, Nuttall, however you want to say his name. One thing I always focus on is inventory, and this isn't the total inventory number, but this is the deficit that's in the big three: crude, gasoline, and distillate. So it's not like you're just looking at crude and then all of the inventory shifted to gasoline. This is looking at all three, and you can see that the deficit is rapidly growing. So the price increase isn't doing anything to slow down this deficit of inventories. And I'll be honest, guys, this is mind-boggling to me. Like, I'd look at this chart and I'm just like, what the heck is going on? Prices are going up, but our inventory deficits continue to drop. At some point, we need to get this to level off and increase. We're coming up to driving season here. It's going to get warmer, and people are going to take more vacation. They're going to start flying on airplanes. At least that's what I'm doing. And I don't know how they're going to turn this around in the middle of summer in a high driving season. So I got my eyes on this. If you guys want, add me on Twitter. It's at finding_finance, and watch this stuff with me. This is what's important, is these inventory numbers. So I think, tying it back to the ratio, I think oil is going to outperform gold if this continues. And there's a lot of things. I did a video today, or I should say yesterday, that talked about all of the shortages that could potentially be coming in some of these commodities. So that's what I got my eye and I'm focusing on those shortages and deficits in the future. The short-term noise with all this volatility, it's all short-term noise. Focus on what's behind me in this inventory deficit, and the prices have to go higher. It has to fix this. So demand, in my opinion, I don't think supply is going to come online. I think we're going to have to destroy demand. At what price that's going to happen, it's anyone's guess. We'll find out soon. And I want to be in the companies that sell oil if demand destruction is going to happen with oil prices. If you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.